Hi, this is R Sundar. Welcome to this special episode where I am going to talk about the long-term outlook for Indian markets. Many people, they are very bearish. Why? Because the markets shot up in the last one and a half years. And politicians always believe that people memory is very short term. They can remember only what happened in the last 6 months. They will not remember what happened in the last 5 years. So that's why they may do so many wrong things, but closer to the election they may do something good. The same way in stock market also, people only see the short term. In the month of January, Nifty was 12,000. Now it is 17,000, closer to 18,000. So 6,000 points shorter. So it has to come down. And they all say, there's so many things, mean reversion. So if the price go up by 1,000 rupees, it has to come down by 500 rupees. That's called mean reversion. I really don't know why gold price or real estate price never work for mean reversion. And forget about all those things. But I'm going to give you some macro pictures. The very big picture. Let us look at the past. Then let us try to predict the future. One, in the year 2000, there was a dot-com bubble crash, the markets fell. In 2020, coronavirus, the markets fell. And after that, market found some bottom somewhere. And after finding the bottom, the market started going higher. After falling to 7,500 and after consolidating, and after that the market shot up more than 100%. From 7,500 to 15,000 is 100%, but now we are closer to 18,000. So, if you want to know what is going to happen from here, the next 2 years, and you have to go back and see what happened in 2 years there. Instead of just speaking, I am going to show you the chart. And look at this chart. I put the Nifty chart from 2000 to 2007. Look here. Prior to 2000, there was a bull run. So this is a monthly candle. So prior to 2000, the markets went up. So it went to the peak here. Then came the dot-com bubble. The market crashed and market came all the way down. So the low point was made here. Then after that, it was just consolidating. And if you look at sometime 2003, so this is 2003. So that is where the market bottomed out. After bottoming out, there was a steady increase in the market. So increase all the way from 2005, it went up to 2067. So you can see the index level on the right hand side in a black color. So in 2003, the Nifty was around 930. So from 930 in 2005, it went up to 2,100. 930 to 2,100, which is more than 100%. Just like now we are more than 100%, approximately 120-130%. Right now, from 7,500 to 17,500, it was a non-stop rally without even a single 10% correction. But however, here there is a very big red candle. So that is one extraordinary issue. In 2004, BJP formed a government without the majority. So they had to prove the majority in parliament. So they did not have enough numbers. In Tamil Nadu, there is a party called FII DII, which was led by J. Jayalalitha. If she supports BJP, so the government will survive. If she does not support, the government will fall. But she did not tell whether she is going to support or not. Whereas all other parties, some parties said we are supporting BJP, some parties said we are not supporting BJP. So the numbers did not add up. So finally it came to the situation on the day of voting, the FII DII decided to vote against BJP, and BJP government, which was led by Atal Bihari Vajpayee, lost the confidence vote just by 1 vote and the government fell. So that was the extraordinary reason why the market fell. If that had not happened, you would have seen something like this. A continuous rally of 120 to 130 points percent without even a single correction. And of course, now in the last 1.5 years, there was no political instability. There was no such problem for the current BJP government. So, if you leave that extraordinary event, so what has happened during the dot-com bubble, what happened now during coronavirus? So far, it has exactly happened the same thing. I will tell you one more analogy. When I was in Singapore in 95-96, I used to put my money in bank FD. Believe me, I used to get 20% interest. Of course, those days they used to pay extra interest for NRI deposits. Even the local people deposits 13%, 14%. There was something called Indra Vikas Patra. You put the money, it will double in 5 years. Government guaranteed. So double in 5 years, it works out to be around 14% interest. Such a high interest rates. So for deposits, if they are giving you 13%, 14%, imagine if you want to take a loan, what will be the rate of interest? 18%, 20%. But what happened in the year 2004 when Vajpayee government came, and two things happened. One, the international crude prices crashed all the way to $10. And second thing, the interest rate came to the lowest point. I know many of my friends took home loan at 7% interest in 2004. And prior to that, 18%, 20%, so the interest rate has come down low. The same way, if you see now, in the last 10, 15 years, so the interest rate has been 9%, 10% like that. Now, I am buying an apartment in Chennai and I am going for a home loan, and rate of interest quoted my banker is 6.7%, even lower than the 2004. 2004 I remember 7%. So what happened? That time also the interest rate is very, very low. The interest rate now also very, very low. Then what interest rate has got to do with the market? Definitely. One thing is that when the interest rates are high, the people tend to put the money in FD. When the interest rates are low, so they are not interested putting the money in FD, so they can put it in market or they can do some other business. And second thing, if I want to do a business, so if the interest rate is 18%, 20%, the interest cost will be very, very high. So I'm not interested in doing any business. But now the interest rates are so low, so I can set up a business. The low interest rate regime helps the businesses to flourish more. In fact, that is the reason why the interest rates are low. The business people can borrow at a lower rate, and so that can revive the economy. So that is why, Lehman Brothers collapse, why they bring the interest rates down in US. Coronavirus, why they bring the interest rates down. When they bring the interest rates down, businesses can borrow at a lower rate, so businesses can do very well. So this is the second thing. What normally happens in a stock market, somebody bought Yes Bank for 10 rupees, it went to 400 rupees. Then after going to 400 rupees, there was a scam in Yes Bank, again the price has come to 10 rupees. And DHFL, every Tom, Dick and Harry used to have a DHFL share. It went from 100 rupees to 300 rupees. There was some scam, so the price again has come to 10 rupees. Generally in stock market, people, though they are having a good profit, but they always have some fear. Whatever is the profit, still it is a paper profit. Let us say somebody has invested 100 rupees, that share has gone up to 300 rupees. He will like to book some profits. Like if I had bought 100 shares, now if I sell 30, 35 shares, I can get back my money. So the remaining shares is free for me. After that, even if it goes to zero, I don't have to worry. So the people will start booking some profits, especially when the index is more than double. When the index is more than double, stocks will be 3 times, 4 times. Look at Bajaj Finance, 1,800 last year. Now it is 8,000. How many times? So most of the stocks. Look at Tata Motors, from 70 rupees to 300 rupees. So what happens? The people who book the profit, what they do with that money? So they go and invest in physical assets. Because this is not a physical asset, shares. That's why they are worried. So especially they will be getting more interested in physical assets when the interest rates are very, very low, then the real estate sector revives. That is what exactly happened in 2004-05. The real estate cycle revived, and that is what is likely to happen now. That is why the real estate index is shooting up like anything. And last Thursday, the real estate index was up by 10%. All the real estate shares were up. And look at all the real estate stocks for the last 6 months, shooting up like anything. What does it show? There is an activity picking up in real estate sector. What happens when the real estate price shoots up? Let us say I bought 2 pieces of lands for 2 crore. Now, each piece of land now is going for 5 crore. So what I will do, I will dispose 1 piece of land so that I can get back my money, so that I don't have to worry about the real estate crash in future. Then when I book the profit, so where that money will go? That money will come to stock market. So one more thing I tell you. So I told you the interest rates low, the people can borrow to do business. So that is called capex cycle, capital expenditure cycle. I'm just giving you one simple example. Let us say I have 100 rupees with me, I'm doing a business. Let us say I'm making 20 rupees profit. So that means my earnings per share is 20 rupees. Let us say 100 rupees is the face value of my share. So market, let us say it gives me a 10 PE ratio. So then my share will be trading around 200 rupees. In a normal market condition, I may be making 20 rupees profit. If my business is good, I may make 21, 22 rupees. Or if my business is bad, I can make 19 or 18 rupees. So therefore, my share price will be moving between 180 and 220 in the market. Forever, it will be like that only. But what happens when the interest rates are low? So the people are motivated to borrow more, to spend or to save or to buy apartment or to buy a car or something like that. So the demand for the products will pick up. So let us say I'm making cars and I'm making 100 cars per month. Now the demand is more. So I may plan to make 200 cars per month. But I don't have many, I have only 100 rupees. What I can go? I can go and borrow 100 rupees from the bank. So 200 rupees, I may be making 200 cars. Earlier 100 rupees, I was making 20 rupees profit. Now 200 rupees in the business, I may be making 40 rupees profit. But out of that 40 rupees, I may be paying, let us say 8 rupees as the interest to the bank. That means my net profit will be 32 rupees. Last year, with 100 rupees, I made 20 rupees. This year, with 100 rupees, I am making 32 rupees. So my share price will be trading around 320 rupees from 200 rupees. This is because of leverage. When I can take leverage? When I am confident about my business, when the interest rates low from the bank. And that is what is happening now. This is called capex cycle. So without affecting anything, so my share price can go from 200 rupees to 320 rupees. Then in a bull market, people will be ready to pay higher PE ratio. That is called PE expansion. So instead of 10 PE ratio, my share may be going to 15 PE ratio. Last year my profit 20 rupees, 10 PE ratio is 200 rupees. This time my profit is 32 rupees, my PE ratio may be 15 PE ratio, so my share will be trading around 500 rupees. So this is how the share prices go up in a quality companies. So this is called capex cycle. Now that capex cycle is reviving. You can see dot-com bubble, coronavirus, market crash, market consolidate, shot up more than 100%, shot up more than 100%. Interest rate cycle is very low, Real estate did very well, but here the real estate has not started doing very well, but there are indications from the stock market that the real estate is going to do very well. Capex cycle revive, and then everybody was shouting this is the end of the bull market. Now also everybody shouting this is the end of the bull market. So one company, Evergrande, is planning to default, then they say this is the next Lehman Brothers collapse, Nifty will be coming to 6,000, right? And people made t-shirt for Bank Nifty 10,000, right? And somebody said, you know, I'm selling all my shares when the Nifty came to 10,000. What has happened after that? After that only the real bull run came. So now also the real bull run may come, right? I will not be surprised if Nifty goes to 25,000 or 30,000 in a matter of 1 to 2 years. And now look at the chart. When Nifty shot up from 900 to 2100, that is when everybody started talking, shot up more than 100%. How can this go? There is no economy, this and that. And everybody predicted this is the end of the bull market. And look at what happened. The real bull market actually started from there. And from 2200, Nifty went up to 6,300 all the way. That is 3x, 3 times. When everybody said bull market ended, from there the index went up 3 times. I have given you a good argument. So whatever happened there, the same thing is happening here also. But of course, as one extraordinary case, Vajpayee government fell, something may happen in future also. That we don't know. But barring unforeseen circumstances, I can tell you, most of the people say this is the end of the bull run. Now let me declare this is the beginning of the bull run. So what you have seen so far is only a trailer, main picture abhi baki hai. Don't believe the people who are talking very bearish. But at the same time, from 2005 to 2007, the market shot up 3 times, but in between there were number of times Nifty fell more than 10%. Any time market can fall more than 10%. So that's a normal correction. So I'm talking about the macro picture, long-term view, not the short-term view. But any time market fall 10%, believe me, that's the right time to invest. In the worst case scenario, it may fall another 10%, not more than that. You can buy and average. And in future, markets will go up. But again, I've spoken all the positive things. There are some negatives also. You can't say negatives, some shortcomings we can say. In 2005, we are very competitive compared to the world countries. But now, I don't think that we are very competitive compared to the world countries. In terms of land price, in terms of labor price, we were very cheap those days. Nowadays, we are not so cheap. That is one main reason why the Nifty may not go 3 times higher in 2 years' time. It will go up, but it's not going to go to the same extent. And another thing is that, those days from 2005 to 2007, our currency depreciated so much. Hence, our exports became competitive. But nowadays, our currency is very strong. In 2013, when the taper tantrum came, Indian rupee went to 69. Now it is 73. So it's just hardly 10% in almost 10 years. That averages out only 1% depreciation. And those days, they used to be 5%, 10%, 20% depreciation. Number one, our currency is relatively strong. Number two, we are not very competitive in terms of land price and labor price and other things. So we may not have the same momentum like we had in 2005, 6, 7, but something like that we can have. I hope I've given you some interesting information to you all. So hope you enjoyed watching the video. Thank you for watching.